We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to look at Read the Ticker RTT momentum indicator. Now what it highlights is a market behaving well, a market behaving badly, a market that's been broken to allow people to buy at better prices, and the following repair which allows them to profit. Just a little bit more had a trading rule which basically said as long as the stock is acting right and the market is right, do not be in a hurry to take profits. But we do know the big boys can break the market, break the higher lows and higher highs through just to scare everybody out so they can get in lower, and when the market repairs they profit well. To see these plays in actions of a market acting right, a market acting badly, a market being repaired, RTT momentum indicator is a good tool to do this. Here we have a stock, Wyckoff Healthcare, a New Zealand stock, monthly chart, and down below here we have volume with an average, but we have RTT momentum. Now RTT momentum is broken up into two parts, the fast average and the slow average. The fast average is a representation of the price action momentum, and the slow average is a average on the momentum itself. Obviously red is bearish and blue is bullish, rising is good, falling is bad. So this momentum indicator has helped to easily identify a market behaving well, a market behaving badly, a market that's just been broken and it's likely to, and a market that repairs itself. For example, if here we have a sign of strength, and momentum suddenly breaks up and momentum repairs itself. If momentum was to maintain its strength, it would have, on this bar here, continued higher. But momentum failed here, so it's breaking momentum and goes down. There's disappointment and goes down the trend line. So for all that excitement there, that excitement should have continued on before that point there. It should have continued on higher. So that was a warning. So the market repaired itself by the dip there, but momentum failed to break out. And momentum waned. We had a catastrophic failure of momentum. If you're short it's good, if you're bullish it's bad, and it's just sunk. Here we had some minor sign of strength, some strength coming to the market, showing momentum, which is near equal to that. A pullback, demand coming in, so this is a true representation of strength. Momentum acted correctly, so this is a market acting correctly in a bullish area where they have rising fast momentum with a rising slow momentum average. See here we had rising momentum, fast momentum, but it failed, so the market behaved badly. Here the market behaved well. So this is a monthly chart, and this is a monthly indicator. Obviously you can do this in daily and weekly time frames. What actually happened here is Wyckoff Healthcare, they make a tool which is a dehumidifier for patients in hospitals. It allows patients to breathe air which is adjusted to their body temperature instead of breathing the hospital air, which might be, whatever it is. It's less stress for the patient to breathe dehumidified air, which adjusts the body temperature and creates less stress on patients who have had operations. Now, prior they were selling it through distributors into the United States from New Zealand, and once the contract ended they started selling direct to the market, and obviously margins improved and profits improved, and the stock went all the way to $11. And that's what happened here with the strength and momentum improved. Momentum can forewarn on fundamentals. So if you're a fundamental trader, you might have had a pre-warning, but if you're not new to the stock and you see the momentum changing, you can catch up on the fundamentals when you see the change of momentum and you see a stock starting to act right. And of course, if you're a fundamental trader, you obviously want stock and momentum to act to support your fundamental idea. Same with your value investor, whatever. You obviously want to have price rise and start acting right. You don't want to see it be broken. You do not want to see momentum failures. Let's have another example. Here we have BlackBerry, BB. Now BlackBerry went from a mobile phone provider. I think they changed their scope into some sort of enterprise solution. Here we had a nice little base pattern. Any Wyckoff traders happy with that? It jumps the creek. We get a sign of strength here. What's a minor sign of strength? Because it doesn't break out here. Momentum attracts investors. They invest in here. But momentum fails. As momentum doesn't make even though price makes you high, but momentum struggles to get over here. And then we have a catastrophic momentum failure there. The chart is damaged there. Here it's acting well here where my cursor is, and acting badly here. And as you can see down here, the chart is pretty much broken. But if it holds up here, the chart is starting to repair. So the big boys, they can see this action coming in. They're able to accumulate lower prices. They may have pushed price action down here to see if they can repair. And obviously if chart starts to repair here, momentum will improve. So now BlackBerry becomes one to watch. It's the same settings as the prior. It's a monthly chart. Let's have a look at another example. Silver. Monthly chart. RTT momentum, the same settings. Here we had the big rally in 2016. We saw lower lows in price, a little base pattern. Momentum improved dramatically on the fast moving average. The slow moving average has started to trend up, so it's rising, bearish. So here we got a red line, but it's rising. Big sign of strength, big move. But if it was to be to continue on, momentum should not have failed there. It should have continued on here. This bar should have held up. Momentum, if it was this energy, should have contained its momentum and it should have maintained its advance through there. It should really never got below the zero line, but it was a massive momentum failure there. So this is good action here, behaving correctly here, behaving badly here. The chart is broken. So therefore the momentum recovered. So the price recovered. The momentum failed there. Okay, we went into sort of wandering around a no man's land. And we had a catastrophic momentum failure when the fast moving average couldn't even cross the slow moving average, and we sunk down here. But as you can imagine, the big boys have brought this down. This is like a bear trap. People thought it was going low, but it's a bear trap. And they've sunk momentum down to allow it to accumulate, I believe, at better prices. So the big boys are able to break a chart and then repair it and into profit. So here we have higher lows here. Momentum starting to improve. It's not, bullish enough for a retail investor, but if we get some higher action here, we might get some confirmation of bullish momentum around the $14-15 mark. So just give us a couple of months. Silver's looking exciting. So that's how you can use RTT momentum to judge a chart as acting well, acting badly, being broken, being repaired, momentum success, momentum slump. That's a good tool, especially on a monthly chart. If you want to catch those big moves, if you're going to catch a big move, you need a big hook. And the RTT momentum just helps to highlight chart action. Thanks very much for watching.